Digital lending and payment platforms are both two key important drivers of financial inclusion in Africa. In the past decade, financial technology, fintech companies have, across Africa, risen from relative obscurity to some of the continent's largest and fastest growing firms. Three of Africa's unicorns, companies that are valued at more than $1 billion, are fintech companies ranging from payment platforms to digital lenders. In the lending space, fintechs have been able to rapidly onboard customers by offering sleek customer experiences and unsecured algorithm-backed loans that do not require collateral or face-to-face conversations. However, in many transactions across the continent, cash remains king. So the growth potential for fintech is still significant. And recently, McKinsey estimates that revenues for African fintechs could grow by up to 8 times by 2025 if current penetration levels reach those of market leaders. Well, with me to discuss these disruptive trends are Topsy, Kola, Oyeneyin, partner and co-leader of McKinsey's payments practice for the Eastern Europe region, Middle East, and Africa, where she serves as a leading financial services expert and fintech guru advising on developing and scaling innovative products and services. Also joining the discussion is Ngozi, Dozie, co-founder and CEO of Carbon, a digital bank providing Africans and SMEs in Ghana, Kenya, and Niger with access to credit, simple payment solutions, and high-yield investment opportunities. Thanks for joining me, Ngozi and Topsy. Great to see you.
Thank you.
So I guess, Topsy, my first question is really just to understand the scope and size of the market. Can you put a number on the size of the fintech space? I know it includes so many different things, but is there a way we can even estimate the market size?
Yeah, I mean, it's something that we've looked at a couple of times. In 2020, we did a market sizing of basically what was the value of the payment sector in Africa. And that figure was 15 billion. And that was for electronic payments. And that is probably about 7% of the total value of all payments, right? So to your point earlier about electronic payments still being a very small size of what's happening. We've estimated that this is in terms of revenues, and it's made from about 47 to 50 billion transactions. We've estimated that would grow 20% per annum over the next 5 years into 2025.
And you say 40 to sort of 70 billion transactions. For a continent that's almost 1 billion people, that still sounds quite small, right?
Yeah, no, that's the point. And I think that's why there's a lot of excitement in terms of fintech, in terms of payments, because the opportunity is still quite significant.
Yeah, indeed. And, I'm going to ask you, Ngozi, because all the fundraisings I hear about is fintech, it's payments. What are these guys saying that we don't? I mean, it's such an appealing sector to investors. Why do you think that is?
Yeah, I think there are 3 main reasons. One is it's fundamental infrastructure. Basic problem is, how do I get paid? How do I send money? And I think that's why, to Topsy's point, it's a huge industry and we've had many issues here. And many of the VCs that have invested, globally have made nice returns. Biggest companies globally, you think about the Alibabas, you think about the PayPals, even here, the Flutterwave, Paystacks, these are huge companies because they're solving a fundamental problem. And I think the 2 other issues are, one, is that there's still a lot of inefficiency in the system. If you think about banks here, they normally operate at a cost to income of 60%. So there's a lot of inefficiencies that fintechs typically like to attack. And then lastly, I think customers of all these legacy institutions are very dissatisfied with what they've received. So when you combine those 3 together, VCs wanting to invest, high inefficiency, and then huge customer dissatisfaction, I think it makes a very potent combination for
Indeed, you say that, but if you look at the figures I have here, the investment is actually going more into the payment side, and we haven't had such big announcements for digital banks. Yeah. Why do you think that is? I mean, you run a digital bank.
I think there's so many problems still with payments. If you think about it here, in other markets, you can pay somebody selling on the street with a QR code. Whereas here, despite the many efforts to improve the cashless society, there's still gaps. And until we marry that cashless platform with merchant aggregation, there's still going to be that gap. And that, again, is the opportunity that Topsy's highlighted.
Yeah, and Topsy, I have to ask you, because I guess in your line of work, you advise a lot of companies, and you see sort of the subtleties between the payment side of it and the digital lending. I mean, what are some of the things that may be more appealing to investors on one side versus the other?
I think it goes back to what Ngozi said, right? For investors, right? A lot of investors, we've spoken to a lot of investors and why they're looking at Africa. And they see Africa as almost like a last frontier. Some people missed out on Latin America, some people missed out on Asia, and are determined not to miss out on Africa. And when they look at the continent, they start asking themselves, what are the models that we've seen succeed elsewhere? And can we catch in here earlier, right? And I think a lot of that has been around these payment platforms, right? They understand the template, they understand the metrics, and it's sort of like a no-brainer. In terms of digital learning, there are, of course, a lot of opportunities on that side, but oftentimes as well, it starts with those who have the payment platforms, who have the data, and then they can add on some of those additional services. Of course,
so an integrated sort of approach.
Absolutely.
So, okay, so Ngozi, let's look at the success of digital banks on the African continent. You know, you often hear, and I don't know how informed these views are, rates of default or no collateral is a big risk business, but there's still new digital banks coming on. You're still in business, right? So can you tell us how that sector, fingers crossed, can you tell us how that sector has really evolved and maintained its resilience?
Yeah, so I think it's not a customer dissatisfaction, right? And I think an access. So if you think about it, 10 years ago when we started, it would take X weeks to get a decision from a bank after an in-person application as to whether you had that loan or not. We came in and said, we will give people who otherwise had no access via mobile platforms. Not only do you not have to come into the branch with application forms and your grandparents' house as collateral, we will make that decision immediately and provide access. So I think just changing that process means two things. You're increasing access, you're increasing the speed of decision making, and you're also doing it much cheaper now because you don't have to have a branch, paper, etc. It's all using data, algorithms like you mentioned at the top of the show, and so that makes it seamless. I will say though that the banks have an inherent advantage because banking is all about cost of capital, low cost of capital, distribution, and also the ability to underwrite, which is basically, do you know the customer?
Right.
Yeah.
So we have to compare the defaults that you're talking about with lenders like myself who are giving strangers effectively or future friends loans when we've had no information on them, whereas the banks have known them for years. And I will say though that our defaults are comparable. And if you look at Nigerian banks, which is where we operate mostly, they all say we have 6% NPLs, etc. If you look at their retail books, right, what they're doing individual loans, you'll find that they're all in the 20%.
It's similar to digital lending,
exactly.
Essentially.
Which just shows to show that we are operating more efficiently and at comparable default rates without prior knowledge of the customer. Yeah. So I think we're doing well so far.
It would be interesting to hear the flip side, which is a traditional banker sort of talk about that.
They should come.
But Topsy, so what I want to sort of understand is what some of the emerging consumer trends are that are going to shape the next generation of payment platforms. Many of us are quite, familiar now with the traditional payment platforms we've now been seeing. But what are some of the things that are evolving in the market that you think are very interesting?
Yeah, and I think when you think about trends, right, there are different trends either in terms of the technology that might shape sort of the platforms or the types of channels and things people might use. Trends in terms of, for example, what tools consumers have access to, right? I mean, smartphone is something that all payment companies watch in terms of just what is the smartphone penetration rate, because that allows you to have a whole host of different things. But I think for me, one thing that is interesting and I'm keeping an eye on, and we've had a number of conversations around this, is just how consumers live and work going into the future, right? The reality that people choose to live in one place and work in another place, being able to facilitate payments across borders, but not just the payments, but the entire value chain, your taxes, file your sort of like living arrangements and things like that, I think would be very important going forward, right? And I think would fail. I think when I look at Nigeria, you're already seeing some additional trends in terms of just technologies and tools or payment tools that people are bringing into play. There's QR code that, different players have been trying to push. NIBS is launching a domestic scheme card.
That's the Nigeria Interbank Settlement System.
Yes. And that's probably going to be, a domestic scheme card powered by QR as well. So I think there could be some interesting things that emerge this year.
And does that say to me that consumers are really looking for a one-stop solution? So, or anything that has to do with money, I want it ideally on a single platform. I don't want to think, I'll do this check here, I'll walk into a bank next, I'll do my lending on a digital platform. I mean, do you see a future like that?
I think consumers are looking for what's convenient and for things that work. At times, we don't even need to take it too complicated. People just want something that works and that is convenient. That's not going to give me so much stress, right? Whether I'm dealing with Naira or whether I'm dealing with FX, which is a reality, or whether some consumers are dealing with digital currencies, right? They want that level of flexibility. They don't want to deal with the hassle of paperwork or going through different entities, right? And I think providers who are able to provide that to them in whatever format will be the ones looking to win.
So interestingly, when we look at what traditional banks are doing, you know that saying, if you can't beat them, join them.
Yeah.
And a few of them have tried to sort of pivot and migrate or do mergers and acquisitions or integrate forward, backward, wherever, just to capture a share of a growing and disruptive market. How successful do you think traditional banks with hard and large-scale infrastructure have really been in terms of competing?
So I think it's difficult because I think every company, particularly or industry where you've had a culture of operating for a certain way, to react to the very quick trends we're seeing, takes a lot of leadership and will institutionally. And I think that's where most people struggle. It's one thing, if the CEO says, "Oh, I like this, I want to do it," but to steer a very large ship, I think it's very difficult. And you've seen this globally. You're seeing, the likes of Goldman Sachs, trying markets, they've just shut it down. We've seen JP Morgan try to launch their own digital bank, they shut it down as well. So I think the message that it's difficult, but again, I don't even think they need to do that. Just to Topsy's point, give the customers what they want, right? You don't, we all have different structures, different cultures. If they're giving the customers what they want, I don't see the need to actually transform themselves into a new fintech. Just provide what you're doing and just increase efficiency.
And still on that point, one of the great things about technology and innovation, it drives other types of technology and innovation. One of the things I've seen evolve is a lot of companies who are now fintech companies are actually doing things like providing credit services. So you now have this whole other ecosystem that's developing alongside fintech for people who want to do KYC information, who want to do data metrics on their customers. To what extent do you think this industry is really going to lead to the creation of new products and services, and which ones perhaps are you particularly excited about?
I think it boils down to basically us shifting from just pure payment solutions to all the different value-added services that can get on top of that, right? And I think where I see this going is basically leveraging fintech solutions to actually add new products and services that are sector specific, whether in healthcare or in education and so on and so forth. We've seen it in logistics, for example, right? So you think about a Corporate 360 solving a logistics problem, right? But on top of that, you've now layered sort of lending to the drivers, you've layered insurance, and you've layered those kind of services, right? So I see this being played out in specific sectors. I'm really excited about what could happen in the healthcare space. You've already started seeing, low-cost insurance. You've seen things around in the pension space. You're also seeing things coming up around, lower, micro pensions. I'm looking forward to see what we could do in education. That's a space that no one has really spoken about. But how can we sort of create education loans, for example, right? And we have the data, you have the solutions. How can we bring some of those things together? So that's what
and I think that's an interesting one because clearly fintech, the private sector has to play a very strong role, but there's the issue of regulation, which we'll talk on. One of the things I wanted to talk about is, last year, the cryptocurrency market, it was like, it almost felt like a vendetta against cryptocurrency companies with regulation here, exchanges crashing, and all these technology-driven sectors are all intertwined. Have you seen a major impact on payment platforms and systems or even digital lending as a result of the troubles and rumblings we've had in the cryptocurrency market? I'll start with Topsy and I'll come to NGD.
Okay. So when I look at sort of the crypto space, and like you said, like last year, it almost seemed like, all the naysayers had their day in town, right, with what happened in the market, right? But I think from an Africa perspective, and I'll speak a bit more broadly just in terms of that crypto sort of like blockchain, right? I feel like you've seen a lot of African regulators be proactive in saying, listen, we are coming out with our digital currency, right? We're coming up with our own central bank digital currencies, which I think is quite innovative. In Nigeria, we have the e-Naira. And I think that's a good trend or a good indicator for the sector. But I think what's more important is going forward, there would need to be some level of clarity around what is the regulatory stance generally on this space and all forms of digital currencies, right? So not just the central bank digital currencies, on your cryptocurrencies, and also on your stable coins, right? Because I think that clarity is what allows for additional innovation. Irrespective, these transactions are going to take place, right? Whether you ban it or you don't ban it, they'll take place, right? The question is, are you going to have visibility into what's happening? And are you going to be able to leverage it for other things? For example, digital assets. right? So in Nigeria, we have something around digital assets and digital assets taxation, right? So these things have to be married, right? We need to have a holistic view on that.
And from the digital lending side, have you seen any sort of spillover effect as a result of cryptocurrency regulation and tightening on?
Well, from a backstep, I think looking at what the customer wants, we're in a global marketplace. So as a customer in Nigeria, I want high yield and I want purchasing power. And if I can get that via a cryptocurrency wallet operating out of Philadelphia or Asia, etc., I will. My money will find its way there. So I think we can't think that we're in an isolated island right now. And so we are seeing, we know of customers who have expressed an interest in look, you're giving me 15.5% yield, but inflation is 21%. And so I want to put money in a dollar asset that, where it's stable and maybe high yield. And I think that is the trend that we're going to see. So the danger is that customers who are putting deposits on our platform, we will lose them to
high-yielding assets.
And that, of course, has an impact on our ability to lend.
Of course.
Because now our deposits have come down. So I think to Topsy's point, we really need a coordinated approach because, yes, there are different great ideas coming out, regulatory sandbox, innovating licensing, but it needs to be coordinated because it's a systematic approach, and just fixing one side has second and third order effects.
Yeah, interesting point and insight. So, we talk about all these fancy technology terms, but the reality is that anything that is driving financial inclusion is obviously having an impact on broader economic growth and entrepreneurial development. So, what is your sustainable development drive insofar as digital lending is doing? How do you think it's changing the very fabric of society in terms of economic development?
Yeah, in Nigeria, loans have had this negative connotation. I don't take loans, I'm responsible. And that's the wrong approach. Loans are the means for us to get economic prosperity. I am intelligent, but I want further education. I can't afford it right now, I'll take a loan. I want to live in that place. I can't afford 1 year up front. But if I take a loan, I can pay that upfront, or healthcare. And so I think we see loans as a means for providing capacity where it doesn't exist, whether it's for healthcare, whether it's for education, whether it's for infrastructure. And I think the more we take that approach and then try and find ways to bring down the cost of borrowing to customers and the access to customers, I think we're a long way.
Yeah. But do you also see yourself as a missionary? Because in creating a digital lending platform, you're essentially creating entrepreneurs who are either providing services to your platform or who are receiving money to scale their micro enterprises. Yeah,
no, we definitely do. That's why we're called Carbon. Carbon is fundamental to human life. It's found everywhere, and it's very flexible. Carbon as graphite and carbon as diamond. So we want to provide our customers that economic opportunity wherever they need it. And I think fundamentally that's what financial institutions do, right? They're helping customers, SMEs, retail to create and fund solutions that otherwise they couldn't do. Yeah. And sometimes we forget that, but that is a fundamental role of banks.
So Topsy, obviously you've built your career, this current phase in your career around payments, which means clearly that business is very important. There is a whole division.
I would hope so.
There's a whole division dedicated to payments practice. Yeah. But how is the conversation being had at a strategic level? So, at the national level, the importance of financial inclusion driven by fintech. Do you think it is of central importance to a national conversation around economic development? And if not, what would you like to see perhaps?
Yeah, no, I think it's an excellent question. One of the reasons I'm personally passionate about payments and digital innovation is this whole question about economic development, right? I feel like Africa has a few levers left that we need to pull not to get left behind. And this whole digital innovation is one of them, right? When you look at Nigeria, payments has actually been sort of a priority. When Sanusi was governor, he put payment at the core of his agenda in terms of, we're driving a cashless, society and put some policies around that, right? And we know sort of what the economic impact was just in terms of bringing new players in. That was when sort of, licensing for mobile money operators, NIBs, NIP, and so on and so forth, right? When I look at where we're going today, right, both in terms of Nigeria and just more broadly, when you ask Ngozi, how does he think about sustainable development goals? I believe that payments and fintech is actually a critical vehicle to enable that, right? And we've seen that in terms of just flows, right? In terms of how funds flow. We've seen that in terms of financial inclusion, right? We've seen a lot of development goals focus on, listen, how do we get more women into the financial inclusion net, and how can fintech help us do that? Now with climate change, now with everyone going green, again, you see flows of money that are looking for innovation, again, driven by some of these fintechs to help us achieve some of those development goals. So I think it's actually a critical part of the conversation. Yeah. But still going back to something that Ngozi mentioned, when I think about Nigeria specifically, I think for us to be able to maximize this opportunity, that coordination between regulatory bodies needs to happen, right? What the central bank is already driving on a lot of dimensions, how can they pull in sort of like the pension regulator, how can they pull in the insurance regulator, so that we sort of get, maximum benefits.
Yeah, and Ngozi, you just don't work in Nigeria, and I know you've also worked across Africa. When you hear announcements like the Africa Continental Free Trade Agreement, is that a policy that you hear and you think, wow, this is going to be so great for my business? And how is that impacting the work you do in places like Ghana or Kenya?
Yeah, so I think you see a meal, it looks good, but it's in the tasting, right?
Yes,
so the announcements are great, and I think they're positive, but I think we need to see the effect. So, getting licenses in across different markets is difficult. I mean, expectedly. So, but we need to start seeing how these regulations affect, the speed, the cost of operating in these other markets. And I think it's still early days. But in terms of the direction we're going, I think it's fantastic. Yeah. But let's see.
Yeah. Are you actually lending in Ghana and Kenya?
In Ghana, we are, yes.
Yeah. So who are the better borrowers, Ghanaians or Nigerians? No, joke. You don't actually have to answer that.
I will not.
It won't be a Jollof type war conversation. So there's one question I have to finally ask both of you. There's been such a rage about artificial intelligence. People are kind of falling over themselves to be on all these apps. And you work in the technology space. How do you see artificial intelligence, which some have said is going to be the biggest thing this year in 2023? How is that going to shape each of the sectors you both cover and focus on within the whole financial technology space? I don't know who wants to go first, Topsy or...
So I think it's huge, right? If you think about it, it's allowing, fintechs and all businesses the ability to take cutting edge technology and apply it in your operations. Very simple example. It could be as simple as, instead of having customer success agents responding to queries, actually having a chat GPT console. Well, the customer thinks that's a human behind, and you're responding in real time based on the database of answers you've had over the last 10 years. To even for us saying, okay, let's have a chat GPT person act as a banker evaluating somebody who is applying for a loan. So I think we are limited by our imagination into how this applies to our businesses.
Yeah, interesting. And what's your take on?
No, I'm in Ngozi's boat. super excited about the potential for artificial intelligence. I think it has the power to be transformative in the same way like innovation in sort of manufacturing was transformative in the 1914s and the Model T and all the rest, right? Because I believe artificial intelligence, especially with the kind of use cases that we're having now, direct access to the consumer, has the ability to basically transform productivity at sort of granular levels, at an individual level, just in terms of your personal research and things like that, for small businesses and all the rest, right? So it could be super transformative. For me, the question on artificial intelligence is saying, I think the upside is clear, is what could be the downside? What could be the downside with tons of people having access to data and information that might not necessarily understand the implications of that information? And I'll give you a very simple example. Has nothing to do with payments, but hopefully will bring the point home. The other day I was doing a medical test for a domestic staff. The just typical medical screens, hepatitis B, this, and the other. And the results came, and I was trying to get some help interpreting, because one of the results was positive. And I'm like, what does this really mean? Is it just something to be aware of? Or they're like, no, this person has Hep B. It's not for hiring. Yeah. And I couldn't get an explanation. But anyway, I spoke with a medical doctor who said, no, the fact that the person is positive doesn't mean they can't do this function. This is what it means, and this is what you need to do, right? And that's how I see sort of the potential downside of artificial intelligence. What happens when people have tons of information that they might not understand what to do with that data, right? So that's something that we need to keep an eye on as well.
I mean, it's been such a fascinating conversation. So glad to have the combination of your intellectual prowess and business prowess on the program. Thank you so much, Topsy, Kola Oyeneyin of McKinsey, and Ngozi Dozie of Carbon. Thank you
very much.
Thank you for having me.
Thank you. Well, you heard it there. Digital banking and fintech are key drivers to watch for economic growth and development this year. Thank you for watching Business Week. We'll keep an eye on these stories as they develop. I look forward to bringing you more global business news and analysis next week. Don't forget to send your thoughts and join the conversation online via Twitter. See you next week.